Hi everyone, I'm Bernard, a team director at iFAST Global Markets. I've been in the industry for almost 20 years and helping clients with a full suite of financial planning, from investments to insurance and protection. Outside of financial planning, of course, I have a rather unique side hustle. I'm also a licensed embalmer. So yes, I work with clients, which is all of you, at every single stage of your life.
Hi everyone, I'm Albert. I'm a senior trainer and partnership specialist at MoneyOwl. MoneyOwl is a financial advisor with a social mission. MoneyOwl's focus really is on providing holistic financial advice and guidance for working adults across various life stages in Singapore. For myself, I've been with MoneyOwl for about 6.5 years now, and in the financial services industry, I have more than about 10 years of experience. I really enjoy making financial planning concepts accessible and also actionable for working adults just like yourself. And I hope to share some insights on today's topic with all of you.
So first things first, which types of insurance can or cannot be DIY?
Well, that's a good question. There are some types of insurance, namely group insurance. They can be DIY. When we talk about group insurance, I think it's not difficult for us to ignore this very good term insurance known as the Singlife MHA MINDEF Group Term Life Insurance. Now, this is an insurance plan that is available for various groups of people, including national servicemen, past national servicemen as well, and also family members of national servicemen and uniform group personnel. Another group of insurance that you can DIY would include this class of insurance called the direct purchase insurance. So how do you typically look at it is that when you apply for this type of insurance, they have this prefix direct in capital letters, D-I-R-E-C-T.
Yes, Albert, I totally agree across with you. Actually, I am personally on the Singlife MINDEF insurance myself as well. Yeah, but of course, I think there's also some things that cannot DIY one. I don't know, any thoughts about this?
Definitely, and that's where the value of an advisor comes in, right? There are certain insurance that definitely will require a layer of advice for the customer to make sense of how the insurance fits into their needs.
Yeah, actually there's one part of insurance that I normally would not DIY, and that's where the multi-pay critical illness plans comes in. So critical illness are like example cancer or even a stroke situations, and multi-pay means may even pay you 2 times or even 3 times. Yeah, my mom personally, she was diagnosed with cancer 3 times. Yeah, so she had 2 times colon cancer and then followed by pancreas cancer. So in those situations, it's actually a complex situation, and we're starting to see it more and more. So I think for critical illness parts, that's where a lot of time there's different amounts required. So do consider talking to some advisors where you need a little bit more help on this part.
Bernard, I think there's another class of insurance known as general insurance. Maybe you can share a bit on that?
So there are many general insurance around, and of course, the general insurance that many of us know will be like travel. So when you travel overseas, I will always encourage you that you must buy travel insurance. Or even for your home, for your house, you have spent 100,000+ renovating. Home content insurance might be something that you need. And actually that's the area where I would agree. Actually, you can actually DIY on all this general insurance. Those are very plain instruments, and a lot of time, our main things that we check on is the premium, whether it's cheap or expensive, and what are the things that it will cover.
On top of general insurance, I think where an advisor can provide additional value would be a very important form of insurance known as your hospitalization, right? So for integrated shield plans, there is no way we can DIY on that. And that's where I think for yourself, Bernard, maybe you have also come across some cases like that in your many years handling clients, right? And what's your view on integrated shield plans?
Actually, it's interesting to hear that. I think you mentioned they shouldn't DIY shield plans. Recently, actually, there was a new launch by the CPF board comparing shield plans, especially comparing the premium and the class of cover that they have. Seems like from this perspective, there's some possibility that actually even yourself as clients, you can go online to check on premium, check on cover. I wouldn't say full DIY. You can check on that and actually make some decisions yourself.
I think that's a good point, right? Because at the end of the day, the tools available only help you to measure how much premiums you're going to be paying and what type of coverage. But at the end of the day, you still have to sit down with someone like yourself and go through the paperwork to get yourself a shield plan. Adding on to the health insurance planner that Bernard you mentioned, right? There are also other types of insurance that one can do a bit of research before meeting the advisor.
Of course, I would think there are a lot of hybrid models available. I always encourage friends and clients, go online to read about it first, but also compare this across with the advisors. Because a lot of time we're just comparing the online contents we forgot to put the advisor in to compare, and to compare how much they have to share across with us and their advice across with us. So maybe my thought is have a hybrid model together, combine these two parts.
Agree on that, Bernard. And then beyond comparing, there's also this advisor's experience, right? Because financial advisors don't only sell products, right? They also help clients with claims, and from your claims experience, you are also able to advise clients on how they should be looking at certain products, maybe claim insurance of various insurance companies, certain considerations down that line as well. So I believe the research doesn't just stop at just the price and the benefit, but also beyond, like what is your overall experience, what is your personal take on certain insurance companies as well. So I guess there's also a place where you can't really DIY that. You really need to have a professional bring you through that process.
Yes, probably let me share one case that I actually handled with a family. Yeah, there was a situation where I was a very, very junior advisor, I think almost even 15 to 16 years ago. When I first started, I actually handled this case of a suicide case. It was really a sad story. The son in the whole family actually had committed suicide, jumped, and thereafter one of the parents jumped as well. So when I came into the scene of the case, I was already handling two deceased bodies on the ground. And when I actually followed up across over with them, unknowingly I realized that actually the whole family is in a credit situation. Actually, both of them were actually declared bankrupt. And that's where I came in to support the whole family in claims and actually running things together. And actually, you'll be surprised, there was actually insurance that they had, which they never realized. It's actually this thing called a DPS, it's the Dependent Protection Scheme. And of course, what I did was to claim these two policies across with them. They were in really a grief state, tearing. In fact, very sad that there were two deceased in the whole family. But I followed through, using the money actually to support them in some level of investments, to grow it a little bit more, to support the remaining children to go through their education. So that was a situation that I actually had. And I think it really built a strong convictions that I think for us as advisors, we're not there just to make sure the policy goes through, but actually to walk through the whole journey across with them towards the end, when a claim possibly happens.
I think that's a very good point, and emotional part of advisory is often overlooked as well, beyond just the dollars and cents. Hey, Bernard, you mentioned that you have this view of having a hybrid model of part DIY, part advisor. Maybe you can share a bit more what this hybrid model means?
Okay, that's actually something that we are collaborating with MoneyOwl directly as well. Yeah, so we have quite a lot of clients or friends who went through the MoneyOwl to get a lot of information, seminars as well, having a lot of resources available, but they follow up across with an advisor across at iFAST to support them in getting a more client-centric experience. So that's where we put both together.
That's a good point that you brought up, Bernard. And at MoneyOwl, we do not have direct product selling service, and that is where we partner with iFAST, and we refer people who are ready to take action to a trusted partner for them to take action after attending the various resources that Bernard has mentioned, like for example some of our corporate seminars, some of our public webinars as well. And if they have some actions that they are ready to take, for example buying an insurance policy, but they are not sure where to go, this is where they can find a trusted advisor with iFAST to carry on with that action.
If I will add a little bit more about this DIY model plus the hybrid and the advisor all coming together, I would think actually for all of you who are trying to do some research into insurance online, do all you can, find out everything. But of course, I think you will know the advisor is free, right? Yeah, the advisor is there to give you a little bit of thoughts about their perspective of what needs to be done. So just put these two together. I think you will get the best of both worlds. Hey, Albert, so some people are quite afraid if they do everything DIY by themselves, but during the claim experience, when they need to claim, example, a critical illness, they are so sick already. How are they going to claim it themselves? Or even death claim, they died, they mati already. How to claim by themselves?
Yeah, that's a very interesting point that you brought up, Bernard. And I think when it comes to DIY insurance, many people forget the part that when it comes to claims, you need somebody, right? And you mentioned mati liao, then how, right? They're no longer around. So I guess where the advisor comes in is to have that assurance somebody is actually looking after your policies in the event that you are either too sick to go and do the claims yourself, or you are no longer around, right? But these days, there are many resources available, such as like if you were to go onto the website, filing of claims can be quite simple and straightforward. However, regardless how straightforward that these processes can be, I can guarantee you For a normal consumer, we have less claim experience than an expert, right, who has done more than at least 1 or 2 claims in their whole working life, and definitely they know how to navigate around some of these requirements. They know what are some of the things that straight away, okay, maybe the insurer will be asking for certain documents which the typical consumer may not know, and that's where I find there is value in having an advisor walk along with you, especially in difficult times when you have a death in the family, when there is a major illness strike. You really need to have the support system there.
I guess by now, y'all will see we are on different sides. But even for myself, I always support DIY research. Then after that, get the advisor to help you in the buying experience and combine both together to get the best of both worlds.
What are the potential risks of DIY insurance planning that people often overlook?
I've actually seen quite a few cases. For many of us which are probably educated a little bit more, we understand what all these websites are talking about, but we actually take all these facts that we see or data that we see as hardcore key information. I give one simple example. Like example, I've seen a few clients comparing shield plans, but they only compare the age that they are in right now. So they say, oh, comparing my present age, which one is cheapest? I will buy the cheapest option, which seems to be the same cover, but they forgot to extrapolate this a little bit more. That means looking at other age groups, especially when they are more and more senior. So imagine when both of us are in our 70 years old, our risk of entering hospital definitely higher. So premium shoots up all the way. So actually the one that might be cheap right now might be very, very expensive when you're actually 70 years old. So I guess those are the things that an advisor comes in, and that may be the key risks that sometimes when you DIY that we may not see or we may not know what we don't know.
Yeah, exactly so. There are definitely blind spots when you try and DIY everything yourself. That again reinforces, right, why we need to have someone there to help us spot certain blind spots, especially when it comes to the premiums. And you mentioned when you are in the 70s, a lot of times in my corporate engagements and my webinar sessions, my workshops, I share of premiums in the 60s and 70s for private hospitalization plans can go upwards of $7,000-8,000 a year, right? And this really shocks many people, and many people are not aware, because when you sign up for integrated shield plan, you typically sign up in your 20s, right? And the premiums are fully paid off using your MediSave, right? And yeah, this is something that really you need to have that more background knowledge on this subject matter for you to be able to spot this potential risk of just DIYing everything yourself.
How are clients with pre-existing conditions affected in the claims process?
I think that's a very valid concern. When it comes to your health conditions, a lot of times people with certain existing health conditions, they may have worries. Maybe they may not be able to get certain types of insurance. That is a valid concern, but I guess really we don't have to worry too much, because we can always put it up and declare accordingly. Whatever I have, whatever medical conditions I have, I will just declare accordingly. We'll put in the application, right, and we'll let the insurance company do an assessment, right, and this is what we call medical underwriting. So these days, I believe there is this stage of application known as preliminary underwriting. Preliminary underwriting, whereby you do not need to put in an application yet, but you just, based on your current health conditions, whatever you have, you put in a preliminary report for the insurers to give you a kind of a rough gauge, right, whether or not you are able to get a standard or with certain loading on your premiums, or even the worst case scenario, maybe an exclusion on certain medical conditions.
So of course, if you are rejected by an insurer, the other option that you can be looking at is to self-insure. I think this topic is a little bit too big for us to talk over here, but to TLDR, the easiest thing is actually to build on a lot of your own investments, so that of course if you are rejected by insurer, at the point of your critical illness, you have no insurance payout, you will have a large sum of investment available to cover your expenses.
And when it comes to a case of hospitalization, for example, right, actually, not many people are aware you do not need to file the claim, because the claim is actually done on the end of the hospital.